Okay, so as Sven have explained, we basically have developed our own trading module in Python. So this is the module. So basically what it does is we can run a simulation. We can test how a strategy would perform in the past. That's the purpose of this module. So for example, this particular strategy, which involves shorting volatility, which means like selling either put or call options. Here we have data here. We can see the data here. This is the code for the strategy. And if we run the module, we can get the backtesting result like this here. It provides us with the risk metrics such as the Sharpe ratio and the Sortino ratio. And we can also analyze the maximum drawdown daily value at risk, the skew kuriosis, which are calculated based on the monthly distribution of the simulation result. And we also can see like the trades statistics, like it shows the total trades, number of winning trades, losing trades, win rates, and etc. Down here, we can also see the drawdown table. Here, the peak date, it means like it's when your capital hits, when your capital is at its peak and starts decreasing. And the validate is when the your portfolio hits the lowest point. And the recovery date is basically when your portfolio, when your capital recovers from that particular drawdown period. So, and also down here, we also have like different graphs for analysis. We have like cumulative returns, like equity curve. We also have like equity curve in a logarithmic scale. And we also can see the monthly return heat maps, the drawdowns, rolling Sharpe ratio, rolling volatility. Volatility here basically means just standard deviation, uh, and the trade log. And also, like uh, once we have the drawdown table, we do the like further analysis on the drawdowns. For example, like here, we would here we have like price movement of each day during particular drawdown period. And if we see any patterns with our naked eye, we would do further research to minimize the drawdown. That's how we operate. Just giving you an example. And also we research our own indicator. I will show you the example. For example, this particular algorithm, it involves directional change algorithm. Directional change algorithm is very well known among many traders or developers, but we would utilize this kind of algorithm to create our own signal to signal any profitable opportunities. Yep. And,
Right. And
and
can you, or you please
yeah.
continue if you have more to
No,
show.
no, no. I was
Okay.
gonna say,
So maybe we can give like a quick introduction how we going to develop the algorithm, how we test it, or how we improve it. So usually we have like already our base strategy which performs, and then we continue researching. And the main point of research is, of course, to increase the profit. But there's just limited ways to increase the profits. But more important is to decrease the drawdowns, right? Because drawdowns is always what make people unhappy. Even if they make an average 10%, if they lose like a 5% in this month, they are very unhappy, even if they made 10% at the end. So therefore, I usually go to Doyan, right, and ask you, okay, what if we do this, or can you analyze the market like this? Can you make this chart like this so we can analyze it? and then we go through with mathematical models and basically test the market, right? So maybe you can show like this model where we show the movements on the weekends or on a Tuesday or something. I think Tuesday is a good day. So yes.
All right.
So
So
here you can see. Yeah, please explain it.
Oh yeah, so as Sven already have explained, we do like we do the market analysis, and this is just an example. So this graph indicates like the price movement of 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 Fridays from 8 UTC to 21 UTC to see if any patterns on Friday, and if you see any patterns with our our eyes, we would do like further analysis, etc.
All right. I think it's really good to see that you see like all our work is really based on mathematics. We have a sophisticated own software to find our strategies. So it's not just somebody who's sitting in front of the screen and thinks like, okay, I will buy now this option or sell this option. It's based on a lot of work. And we continue working on that. So basically, Doyan is working full time only on making such analysis. So when we make, so we make, you see, we make one trade per day, but you can imagine every trade per day we put in 16 hours of work. Like my most of the time goes into that, and we continuously improve it, and we have the right tools to find out if the market changes. And on that, we are very proud, and this is a competitive advantage, right? Not everyone has such kind of a software and understanding of mathematics to create a strategy like we do. And with that, we have, of course, an advantage because people can just do it. And the second advantage is that we use options. All right, Doyan, then thank you very much for your presentation. Especially it's very late for you in Korea. So Doyan is in a Korea, I'm in a Europe, so we cover also like all the whole time zone. And I would like to continue with my presentation. So one second. So you saw already. I hope you can see my screen. And you saw like this kind of information just in Doyan software, but here's a bit more beautiful put together in charts and graphs. And here, this is like our foundation, and here we'll start the process what I just described. So basically, this is one part of our strategy, and I look at it. We see like it has 337% return in 1.7 years, so it's quite sophisticated. But then I say, Doyan, okay, can we change this in our algorithm, and can we see like how will this react on the market simulation, right? And you can see we could then improve the return to 900% from 300%. We could increase the return three times, and this especially was a hedge strategy. So we focused on reducing the drawdowns, and with decreasing the drawdowns, we have been also able to make the strategy even more profitable. So if the market really collapses, we have like a hedge strategy where we not only buy one protective put or call, we buy two, and with that, at a certain point, we make a profit. And if the market really collapse, like $20,000, we make a huge profit, right? So we can make like a 10, 20% only in one trade. But this is very rarely. And most important, this is to protect our strategies. So, and main strategy, zero DTE, delivers already results since May. So we have like now almost half a year. This a bit like old numbers. I took the wrong presentation, but in September we made around 10%, and in October we like in a 7%. So you see constantly we go up, and if you follow the strategy, you also see that sometimes it goes down, right? So, but it goes down usually a 0.5%, then it goes up 1%, but in average, it's small movements, but constant movements. And we already at more than 50% profit at this strategy just in like a couple months. And as you could see, like the whole engine behind it and our work, you can trust that we do our best and make a really sophisticated work to keep our strategies successful and continue delivering good results.